What's going on, y'all? I wanted to get on here real quick and talk about a question I've been getting a ton this week alone, and that's VA assumable loans. Let me start by saying all government loans are assumable, whether that's FHA, VA, USDA, whatever the case may be. However, with VA home loans, there's a little bit more stipulation and some things that you need to be aware of before you assume the loan. Let's start by saying buyers. If you want to go ahead and assume a loan, you're essentially going to be locking into the terms that the seller and the lender had already agreed on, whether that's a 30-year fixed rate at 2.75 or a 15-year fixed rate at 2.85. Whatever the case may be, you can't change those terms. You're going to be able to assume the principal amount of that loan. However, the equity piece, you need to figure out how you're going to pay for that separate. Most lenders don't like to do what's called a second lien loan. And even if they do that, the terms are extremely unfavorable for the buyer. So many times buyers are either paying cash on the equity piece or a TSP, 401k, or a gift. Those are most common terms that buyers are using to pay for the equity piece. Lastly, and most importantly, sellers, you need to be aware that your entitlements are locked with that property unless the VA buyer has entitlements that they can transfer into that home, thus freeing your entitlements for your next home purchase. Hope this covers a little bit, and literally this is scratching the surface. So make sure you're working with a qualified realtor that's familiar with VA assumable loans or FHA assumable loans, because there's a lot more to it, and you really need to be aware before you go in and purchase a home assuming the VA loan. Hope this helps. Let me know what you think or any questions you might have in the comments below. I look forward to helping you all out. Take care.